Payroll taxes can feel intimidating, but they are really just a system for collecting and sending the right money to the right place. Once you understand the basic buckets, payroll gets a lot less scary. By the end, you'll know exactly what comes out, what you owe, and why none of it should surprise you. Hello, C Squared Collective, and welcome back to our series, Payroll in Bloom, Growing Your Team with Confidence. Our goal is to help you build strong payroll systems from the ground up so that you can support your team, stay compliant, and avoid the common mistakes that cost business owners time and money. Now, we are accountants, not an HR firm, so think of this as your practical guide to what we see every day working with small businesses and nonprofits just like yours. Be sure to confirm the details for your organization with your state and local requirements, or speak with an HR representative for more specific guidance. If this is your first time joining us, welcome on in. Each episode is designed to stand out on its own and give you practical, actionable tips that you can implement right away. And if you'd like to dive in deeper, the full series is linked below in the description. As always, if you have questions, drop them in the comments or reach out to us directly at connect@c2accounting.net. So grab your beverage. Today I simply just have a lavender coffee, and let's get started. So today, as I said, we are explaining payroll taxes in a very beginner-friendly way. This is just the basic framework that you need as an employer. Payroll taxes usually fall into two groups. Some are your employee withholdings. This is the money that comes out of the employee's paycheck, and you, as the employer, will send it on their behalf to the correct tax agency. The other are the employer payroll taxes. These are the taxes that your business pays based on employee wages. This difference matters because the withheld taxes were never really your money. You're holding it for a short time and then passing it along. Think of this as a middleman. It may sit in your account for a few days, but it belongs to the employee and the government, not to the business. Now, let's walk through all of the main buckets. Bucket 1 is your federal income tax withholding. This is the money withheld from the employee's paycheck for their personal federal income tax. The amount is based on how they complete their Form W-4, the tax form each employee fills out when you hire them that tells your payroll system how much to withhold. As an employer, you are not choosing this tax amount. You are using their W-4, payroll information, and your payroll system to calculate what should be withheld. Now let's talk about bucket 2, which is for Social Security and Medicare, which is also called FICA or FICA. It stands for the Federal Insurance Contributions Act. And here's what makes FICA a little bit different. It is split between you and your employee. The employee pays their share out of their paycheck, and you, the business, pays a matching share on top. So you're not just collecting it, but you are also paying part of it. For most employees, Social Security is 6.2% from the employee and 6.2% from the employer. Medicare is 1.45% from the employee and 1.45% from the employer. So together, the employee side is 7.65% and the employer matches another 7.65%. Now let's talk about bucket 3, which is unemployment taxes. You may hear two terms here, FUTA, F-U-T-A, and SUTA, S-U-T-A. So FUTA is federal unemployment tax that is paid by the employer only. That's you. SUTA is state unemployment tax. Rules and rates vary depending on state, but this is generally employer, that's you, paid. For beginners here, here's a key point. Unemployment taxes are usually not withheld from the employee's paycheck. They are part of your employer cost. Now let's talk about bucket 4, which is state and local payroll taxes. This is where payroll gets very location specific. Many states have state income tax withholding. Some cities or local areas may also have payroll taxes too. Some states also run other programs such as disability, workforce funds, and paid leave. And of those, paid leave is the one that you'll bump into most, which we'll talk about more in just a second. Some of these are employee paid. Some of these are employer paid. Some of these are shared, depending on where you are. And this is why employee setup matters. You need to make sure that you have the correct address, work location, state forms, and local information. For remote employees, this makes it even more important because payroll rules are tied to where the employee actually works. So now let's take a closer look at paid leave, which in my brain is a half bucket. Some states require paid family leave, paid medical leave, or sick leave, and these may be funded by the employee, the employer, or both. You do not need to memorize every state rule today. I don't have every state rule memorized. You just need to know that payroll is local and you need to check the rules before you run any payroll. When you run payroll, your cost is bigger than the employee's take-home pay. For example, if you pay an employee $1,000, that is their gross pay, the amount before anything comes out. Now, they won't take home the full $1,000 because taxes are withheld from their check. And the employer costs are $1,000 in employees' wages plus the employer's taxes. So when you budget, think about gross wages, employer taxes, workers' compensation, benefits, paid leave, and payroll service fees. And please remember, any withheld taxes are not available cash. Spending them just because they are in the bank can create a serious mess later. Timely filings and payments matter because late payroll taxes can lead to penalties, interest, and stressful notices. This is where payroll services or QuickBooks Online Payroll can help. Well, set up correctly, they can calculate taxes, track due dates, help with filings, and reduce manual errors. But software is still a tool. You still need a clean setup, accurate hours, approved payroll, and a report review. So here is a simple framework. Employee withholding includes federal income tax, the employee's side of FICA, and state or local taxes. The employer payroll taxes includes the employer side of FICA, FUTA, SUTA, and state or local employer taxes. Paid leave may be employee paid, it may be employer paid, or it may be shared, depending on where your employee works. Payroll taxes do not have to be scary, but they do need to be respected. Build a clean system, treat withheld taxes as money that belongs to somebody else already, and get help before a deadline is missed. Thank you so much for watching today. If you walked away with even one thing that you can act on, that is exactly what we are here for. If this was helpful, give us a like, drop a comment, and subscribe so you don't miss what's coming next. And if you know another business owner who's been wrestling with payroll, be sure to send this their way. We all need someone in our corner. Now, there is more where this came from. Be sure to check out the rest of the Payroll and Bloom series or browse some of our other videos on our page to keep building financial systems that actually work for your business. If you have any questions, be sure to drop them in the comments or reach out to us directly at connect@c2accounting.net. Links to our website and socials are in the description below, and we will see you in the next one. Don't forget, keep learning so that you can be rooted in wisdom and grow with care.